Good day, everybody. Welcome to Earnings Call. This week, we're going to be looking at what happened last week with Lamb Weston Holdings, Nike, Levi, Constellation Brands, and then we have the next cycle of earnings beginning this week, and we're going to be looking at companies like Pepsico, Delta Airlines, JP Morgan, Wells Fargo, and BlackRock. All this and more coming up right after this. Happy Monday, everybody. My name is Jeffrey Beamer. I'm the Senior Investment Strategist over at ewotrading.com. And welcome to Earnings Call, where we talk pretty much everything earnings each and every week. Just a quick recap and then outlook on what we think is going to happen in the markets based purely on company movements and expectations. All right. So we're going to begin right away and jump into what happened last week. We're going to start with Lamb Weston Holdings. They gave their first quarter reviews that reflected lower earnings and soft restaurant traffic. They also announced a restructuring plan, which included layoffs and a plant closure. And if we look at the chart here, with all that news, the stock really didn't move. The expected move for this stock was greater than 12%. So how we determine that is what is not only the historical move of the stock has been, but also what market makers are pricing in the options market, what the estimated move is, and that was to be greater than 12%. You can see the last earnings cycle back here in July, this big gap down. This is pretty typical for Lamb Weston, but look what happened here this earnings cycle. The stock actually, after market close on Tuesday, the stock on the following day, which is this next green candle that we see right here, this actually moved higher by 2%. Okay, so a lot of volatility during the day, but ultimately by the end of market close, the stock didn't gap. It only moved about 2%, and now we have gotten a little bit of follow through since then, but nowhere near the 12% that was anticipated by market makers. So if you're playing earnings, this might have played a little havoc with the type of strategy that you deployed. But for us, we're still in a trade that we did with this, and we're looking for Lamb Weston to continue moving higher. Now on to Nike. Nike reported mixed results. They beat on profit and they missed on sales, but the news just kept coming for Nike. They delayed their earnings, they delayed their investor day, and they rehired an intern from 1988, no joke, as CEO of the company. Now, with that said, Mr. Elliot Hill, who's now the incoming CEO over at Nike, he's been with the company for over 30 years, but he did start as an intern in 1988, and now he is back as CEO of Nike, as their current CEO has resigned. Boy, some interesting news there if you want to go dig that up on your own of the reason why. But here, if we look at the chart, Nike had an average expected move of just under 12%. And the stock did gap down on earnings. In fact, I didn't think it gapped enough. Let's see here. It gapped down almost 7%. So this move here was almost 7%. And now finally, several days later, we're getting a nice move to the downside. We're down another 2% today. So I think we'll ultimately get to that 11%, but it didn't come all at once. All right. This is what usually we get these numbers in, and the market makers are pretty dead on. But here is another miss for the market and their expectations, a move of only 6%, and then now an additional 2.1% to the downside today. But still, pretty violent move for the stock, and the shareholders aren't too happy. But for option traders, we have a trade on this right now, and it's actually very profitable, and we're looking to take more profits as the stock drops. All right. So now on to Levi's. Levi is kind of the same thing here on Levi's. We expect, believe it or not, big moves for Levi. The expected move was about 15%. And at the end of the day, it looked good. Like we were going to, we opened down here at $18.66. If we look at the chart, the headline was that they beat on revenue, but they missed on, beat on EPS, missed on revenue. And the funny thing is here is the term, and this is common in the markets, non-GAAP EPS. Many stocks use this. If you know what GAAP is, that's GAAP. That's generally accepted accounting principles. And when companies say we're using non-GAAP to calculate our earnings, it always kind of makes me chuckle. Like, oh, you're going to use non-regularly accepted or non-generally accepted accounting principles. Kind of wacky, but anyway, the stock gap down and then rallied, and we're seeing a bit of a pause here. Thought we might rally back up and fill this gap, but we're having a negative day with the market down. Levi's is down about 1.3% today. You know, the news on Levi was they were making adjustments based upon the longshoreman strike last week that was supposed to be resolved. They came to an agreement at the end of last week, but apparently there are some sticking points, and I don't know if it's a done deal like they said it was. That's the news kind of coming out this morning. But anyway, Levi said they were just going to ship to the ports on the West Coast, or they were going to air freight in. So they were already making adjustments to that. But, you know, some trouble here for shareholders as the stock has, you know, gapped down and looks to be, you know, trading lower and possibly even move lower. And then finally, last week, we had Constellation Brands. You know, what's interesting here is they had strength from beer and specifically on Modelo and Pacifico brands, and they were soft on wine sales. Now, I think that's very interesting because usually wine is generally a higher price point. And is this a shift in the consumer? Is the consumer now going to a cheaper alcoholic beverage? I don't know. But we had an expected move of only 4% through earnings. And look at this. What a week for the market. You know, I don't see them missing calls like this. The stock at this drop, believe it or not, the estimated move was 4%. Well, guess what? This move right here is 4.7%. Okay, that big candle, and we closed on the low. We closed down here at 243.56 on that earnings announcement. This is a move of 4.7%. So essentially, the market got it right. But now we had a little rally on Friday, and then today, this was a big red candle to the downside. But look at that wick on the bottom. Market is rallying, and the stock is moving higher. And we could probably close positive today on Constellation Brands, but we'll see. We'll see. But interesting news that beer sales are up and wine sales are down for Constellation Brands. Okay, so that's a little recap of last week. But this week is very exciting because we get into the next earnings cycle, even though we have, only a few companies. I think it's around 50, 56 companies declaring this week. These are some big names, and this begins the next cycle of earnings. And we're going to get very busy and have a lot of opportunity for our publications over at ewotrader.com. Delta Neutral Income and Delta Neutral Breakout are really earnings focused. And we will be looking at these companies beginning really with PepsiCo. That's the first big name that comes up before market open tomorrow. And then we will be looking at Applied Digital. That typically is a pretty volatile stock. And then you can see the names here if you're familiar with Tilray, Domino's, but we're focused on Applied Digital, Delta, and then the bank stocks on Friday. So if we look at the chart, let's start with the charts and begin with PepsiCo here. Um, so as I mentioned, Tuesday before market open, this has an estimated move of 4%. Okay, this stock is not very volatile. A big company, hard to move this type of ship. You can see even a drop is pretty gradual. This is what we call a quiet candidate. All right, and anything really that is below, especially below 10%. When you're in those single digits, those are generally looked at as quiet candidates, and that's really the name of the game this week are these quiet candidates. The only exception then is if we go over here to Applied Digital. So if we take a look at Applied Digital here, this has an estimated move of over 17% for this stock. Now, this is only a $7 stock, okay? But make no mistake, this stock is a mover on a on a percentage move basis. All right, so a big potential breakout for applied digital. Okay, and we will be looking for that on Wednesday, after market close for earnings on Applied Digital. Okay, now moving on to the big airline this week, which is Delta. This will be on Thursday. This has an estimated move of less than 7%. This is a $50 stock, and so a 7% move there would be, of course, under $5 for this stock to move. A good candidate for maybe selling premium going into earnings if the options allow that, meaning the strikes and the expiration cycles, etc. That could allow us to maybe sell some premium going into this earnings announcement, because we generally don't expect a big move through earnings. And then speaking of quiet stocks, believe it or not, all the bank stocks, and we really get started Friday with JP Morgan, which has an estimated move here of less than 5%. Now, this is a $200 stock currently trading at 210.55, and we really don't expect a big move for this stock. Probably less than $10, either up or down. Not sure of the direction, but we should be able to sell premium here. This is what we consider a quiet expected move, just because JP Morgan, the biggest bank in the country, and a big player, it's really kind of hard to move that ship. And then same thing with Wells Fargo, also a 5% potential move Friday morning. Now, again, JP Morgan is Friday morning. Wells Fargo is also Friday morning. This has an estimated move less than 5%. So here you have a 50, stock trading currently at 57.01, and we're going to expect definitely less than a $5 move, maybe even less than a $2.50 move for Wells Fargo. So another quiet candidate and possibly good for selling premium going into that earnings announcement. And lastly, we're going to talk about BlackRock. Believe it or not, at a $900 stock, currently trading at $940.94. All right. This is a big, look at this move for BlackRock, going from almost 750 up to 950, a $200 move since June. If we go back in time, you can see, look at this. The stock was at 600, rallied up to 800, traded sideways for several months, almost a year, traded sideways, and then now rallying back up once again. This company is just seems like they have their hands in everything. But when it comes to earnings, believe it or not, the average move for BlackRock is well below 3%. In fact, it's closer to 2%. And that's just not, a big move. Now, because this is a $940 stock, options are going to be very expensive here, and it may be cost prohibitive to do some sort of selling of premium here. You want to be sure you're hedged always on this. So a strategy like an iron condor is best, so that you can control your margin requirements when you sell options because you're buying then outer legs. And I bring that up because that's going to be when we look at our trade of the week this week. All right. So that's kind of a look at an outlook of the stocks that we have this week. But again, this kind of launches us into the next earnings cycle. But before we get to our trade of the week, let's look and see how that trade from last week did. We did choose Nike as our trade of the week. And, Nike was setting up pretty nicely with this little strangle here, gapping around. And of course, as I mentioned, the news did not disappoint. The problem is the stock moved, and it just, we're going to have to be a little patient on this. Now, if we take a look at the results, we're up nicely on this. We've made a 24% now return in just 7 days, and that's a profit based upon putting minimal risk into the trade of about a profit of $160 per spread that we did. Okay, so if you did 10 of them, then you're at $1,160. If you did 20 of them, then you can just keep multiplying it out, right? So it just depends on how many you did, but this is using the minimum, one call, one put, different strikes, same expiration. All right, and so here we're looking for the stock to continue to move down. The expiration we chose for this, we have expiration this coming Friday on the 11th. So we only have a few more days to stay in this, actually 4. I would say I'm going to give it today, probably tomorrow, and then look at taking profit. So we're currently up $160 in the trade. If you were to take it off now, congratulations, you have a nice little profitable trade, and you go on to the next one. If you're going to stick with it, then you got to watch it a little closely, and we call that babysitting. Okay, we got to babysit this trade and watch it closely. All right, so now moving on to our trade of the week this week. And of course, there were a lot of candidates to choose from. So we started with the first one on our list, and that's PepsiCo. All right, we're going to do a iron condor on this. And if you're not familiar with that strategy, it's essentially selling a call spread, bringing in a credit, also selling a put spread, bringing in a credit. You do this at the same time on the same stock with the same expiration dates. You bring in that credit, you're hedged, you're protected, your margin is controlled because you're buying the wings, okay? And the wings are just there to serve, we call those trash options, because they're just there to control the margin requirement here, okay? And so this is going to bring in a credit of about $120 per spread that you do per iron condor, and your risk is going to be then $380 per spread that you do at the approximate prices at the time of this show. So that's what we're looking at for PepsiCo. We don't expect a big move for Pepsi, well within the range here, and we're looking forward to that. So that's it for this show. We cover a lot of stocks and covered a lot of stocks today. So be sure to look at that chapter feature that we have below, and you can jump right to each stock as we talk about it each and every week. Also, be sure to like and subscribe our show to come back and be notified of when we get these posted and we go live. And if you want to learn more about how we trade the breakout trades, okay, Pepsi is a quiet trade, but Nike was a breakout trade. You can download our free guide at ewotrader.com/straddle. It's a free guide, shows you how we trade these volatile stocks, these big movers through earnings each and every earnings cycle. So with that said, everyone have a great trading day, have a great trading week, and I will be back with you next week with a recap of how this week went. Everyone have a great week. Take care.